Hey, and welcome to this week's episode of That Real Estate Tech Guy. I'm your host, Jordan Samuel Fleming, chairman of Smartphone, and today's episode is a cracker. So my good friend David Richter from Simple CFO Solutions. He's also the author of the amazing book, Profit First for Real Estate Investing. Now, this is a really great episode, not as much from a technology point of view, although there's a great dive into some key technology parts, but this is one of those episodes where there are some fundamental elements of running a business, of scaling a business that matter. And getting your finances right is one of those. And David brings an enormous amount of insight and value and really thought leadership around this. He's someone who understands it, wrote the book on it literally, and implements it on a daily, weekly, monthly basis with people across the country. And there's some really interesting conversations that we have around kind of not only the core fundamentals of the financial elements of business that you need to track, but also around the advantages and disadvantages of certain bits of technology as it relates to that. I'm thinking particularly about, elements of analysis paralysis. You've probably heard that term, where people sometimes focus so much on data and on reporting that they kind of stop being able to actually move and make decisions. But we dive into a lot of different elements of this. And David's someone who has seen the evolution and growth of so many different people as they've tried to scale their business. He's someone who had built and worked in a very, very successful, like 300 properties a year, successful real estate investment company, but realized that the profit wasn't there and started to focus on that. So if you are a real estate investor, you're scaling your business and you are thinking about, am I scaling this in the right way? Am I getting what I need to out of this business? This is the episode for you. Please take a look at David's book. It is amazing. Take a look at his company, Simple CFO Solutions as well. You will not regret it. Getting those numbers right is critical. So let's dive in and talk to David. Okay, and I'm live with David. David, welcome to the podcast. I really appreciate you being here. Why don't you just give a little introduction to yourself and sort of what your focus is?
Yeah, sure. So I'm David Richter. I wrote the book Profit First for Real Estate Investing. I own Simple CFO. My background, even though if you see me on camera anytime, it looks like I should be a bookkeeper accountant, my background is real estate investing. So I've been in this space since in my early 20s, so the past 12 years, and I have seen lots of stuff. I was in a company where we were doing about 5 deals a month when I joined, and we scaled it to 25 deals a month, but we were spending 26 worth of deals out the door, so it's like, who cares how much is coming in if that much is going out? So that kind of introduced me to the whole, like, it does not matter how much deals you do, it matters what you're keeping. So that's kind of what got me down this road. So that's just a very, 1 minute elevator pitch on who I am.
Well, I like the elevator pitch, and I honestly, it's, your point and the book, Profit First Real Estate Investing, I've been in business for myself for 20 some odd years at this point. I'm 47, and I started my first business when I was 27.
Yeah.
And there is not a business I've ever been involved in or seen or touched in some way that doesn't ultimately come down to the fundamentals of profit, cash flow. Like, the business fundamentals are always valid.
Yeah.
Whether we're talking about AI or anything else. So I that's why I'm really excited to have you on today, because these fundamentals are just like, you can pretend they're not, you can ignore them.
Yeah.
But you're going to fall into the same trap everybody falls into, right?
Yeah, exactly. And that's just where that Robert Kiyosaki hit it on the head with his rat race game, that Cash Flow 101. It's like, that's what we were doing all those deals, just spinning our wheels, but like never getting to the fun track, financial freedom. And that's what you said, Jordan, where it's like, if we don't tighten up the back end, it doesn't matter how much is coming in the front end if we got a bunch of holes in the bucket.
Yeah, when I remember when I first got into business years ago, the phrase that everybody kicked around was "profit is sanity, turnover is vanity, profit is sanity."
Yeah.
And there's a lot of truth in that, because everybody loves the big numbers. Oh, I did 20 million,
Yeah,
I did whatever. Yeah, and how much net profit are you making?
right.
Yeah, that's the bit that ultimately matters.
Yeah. And that's why I like profit first too, because it's like, yeah, revenue's what? Vanity, profit is sanity, but cash is Cain. And like, there's a difference between even profit and cash. It's like someone can tell them, a CPA can tell a business owner, like, yeah, you made what, 100, 200, 300, 500 grand, $1 million, but you're like, where's all that money? Like, what do you mean
But I
you
got no
made that
cash
money?
to pay the
Everybody knows no
bills.
cash in the bank. So, especially in the real estate world as well, too, that's just so prevalent that we see out there. So, yeah, I agree with that statement, because we have to have the profit. We just take it a step further and say, well, I also want you to have the cash to back it up.
Well, let's dive into so if you're, I often I speak to a lot of, I wouldn't, beginner to scale up
Yeah,
investors, right? Because I think it's the beginner to scale ups which are the most kind of at risk for deviating from this.
yeah,
If you built an 8-figure real estate business, chances are you're either real lucky, or like really lucky, or you've kind of you've built a proper business that really cares about these things. But the
yeah.
beginner to scale up is where you can go either way. So if you're talking, when we look at a beginner investor, or someone who's just starting to grow, what's the start point for
Yeah.
them to start to look at this sort of thing and take it seriously?
Well, let's just throw this out there, because we all know it's like this is the redheaded stepchild. Like, just talking about the finances. It's like even talking about this stuff. And a lot of people usually give the advice of like, well, if you're not good at it, hire out a bookkeeper or get a CPA, get an accountant. And a lot of people do that. And I'm not saying that shouldn't be your first move, but I believe from the financial aspect, especially if you're right where you're saying, Jordan, like if you're just getting started or you're in that scale mode, getting a handle on your cash. And because like you're not a bookkeeper, you're not a CPA, if you're running the company, usually like you're the business owner. So you are going to be handling cash. You're going to be handling dollars coming into your bank account, dollars going out, making decisions on hiring, firing, systems, scaling, all that stuff. And that all deals with money. And that's where I believe why I wrote even a book in this vein of like Profit First is an actual system. It's a book out there by Mike Michalowicz. It gives the owner an opportunity to implement a system, even if they're new, like even if they haven't done a deal. We actually work with some people who are like, they have a deal in the pipeline, but it hasn't closed yet. And like, we're helping them lay this foundation, because Profit First is a system that helps you make profit and cash from every deal and be very intentional with it. So I would say implementing a cash flow system or a cash management system like Profit First would be the first step in order for the owner to feel like I'm in control of my money, I'm in control of my cash, I can tell it where to go, versus like I just closed a deal, where the heck did all the money go? Like, that's where I want to give them more of a confidence boost of they know how to at least manage the money and know where to put it. So that would be my first move for them, because they don't have to be a CPA. They don't have to look like me in order to go out there and be good with their money.
Hey, I mean, you're wearing a hoodie. That's,
I am, yes.
like that,
I'm
like
not
that's
the
not bad
typical
for a,
CFO. Yeah.
like, come on. I mean,
Yeah.
if you showed up to this in a suit and tie, I'd be wondering. But and to your point though, and I think this is something that that kind of, well, just hire a bookkeeper attitude.
Yeah.
Um, to your point, you have an obligation, responsibility, and you have a dire need as a business owner to have fundamental financial understanding of where your business
Yeah.
is at. And like, even like, so for me, with our business, 60, 65 employees, pretty established, etc.
Yeah.
Every month, our CFO and co-founder Alex, he delivers a T12 report. And when I was CEO, for the first 8 years of the business, I would get that T12 report, which gave me that gave me the basics I needed to understand, to know, is there a problem? I didn't have to look at in depth every month the cash flow. Like, I didn't have to look at
Right.
every part of it, the profit and loss, P&L for every no, but I needed to understand the basics of where are we? Are we okay here? Are we not okay here? And as even though I had, even though there was a CFO and a finance team, as the CEO and now chair, you still have that responsibility, because if you delegate that away and you fly blind as a business owner, you are risking and you're not risking fraud, you're risking that too probably, but you're also just risking stupidity,
Yep.
because you're not going to know the problem until the problem becomes absolutely unmanageable, right?
Yeah, 100%. That's where I say the three most important numbers, especially if you're just starting out, you need to know what you make, spend, and keep. Like, make it as simple as possible. What's coming in? What's going out? What do you get to put in your pocket? Like, don't make it complicated, especially if you're just getting started out, you're growing, you're in that scale mode. Like, if you're trying to get from, one deal to 10 or from 10 to 100, like, if you're going from there, it's like we just need to know fundamentals. We need to know the fundamentals. What do I really need to know as the owner? That's where we usually start. And I love what you said. Like, I need to know where the problem is. Why most people don't do well in their business is because I take this from the book from Keith Cunningham, The Road Less Stupid. He's like, they run enthusiastically in the wrong direction, because they're not facing the real problems in their business. But if you know where your money's going, if you know what's coming in, if you know the dollars that are going out and like how much is going out, and you know that you're either keeping what you want to or you're not keeping what you want to, like then you get to really dive into the real problem. Like, okay, is it that upstream problem? We're really not making enough and I need to go out there and I need to spend more money on marketing, or the money I am spending is not getting a good return right now, but do you know that? So it's like, that's a spend issue. Like you're not spending in the right place, but because a lot of people just try and cut it off. Like, oh, let's stop the marketing, or like, let's stop this stuff and stop spending. It's like, well, no, we got to generate revenue, but we're probably just not spending it in the most efficient manner, the best manner to get the return. So really understanding what's coming in, what do I make, what do I spend, and what do I keep. That's why I'm so big on profit first, because like a lot of that, the whole system is set up around knowing those numbers from a business owner point of view.
Yeah, and that's, if you are an investor who is trying to scale, like, because there is a difference, if you're doing one deal a month, it's really not that complicated. Like it's not that, like, you can still screw that up, God knows, but like
Yes.
you can screw anything up. But if you're doing one deal a month, you can get by all with basically some pad of paper and a pen and the basics. But if you genuinely do want to scale up and start to do, to build a business that's actually functioning as a business that is functioning outside of you potentially only, or where you're when you start investing in staff and all those things, the first time you ever hire someone, if you've never hired anyone before, the first time you ever hire someone, the weight of that responsibility comes down very quickly, because at the end of the month they want to get paid.
Yeah. Yep.
And they expect to get paid. And if you don't have those numbers properly done, if you suddenly come to the end of the month and you can't pay their wage bill, then you're going to feel that very, very, on a very personal level.
Yeah. That's why it's so important to get it right the sooner you can. That's why I love what you said. Like, where should they start if they're just getting started, or if they're trying to get into that scale mode? It's like, well, if you're just getting started and it's just you, it's a perfect time to like batten down some of these hatches, because if you figure it out now, it's a lot easier when you're under 100,000 versus over 100. Or if you're at the $1 million mark, it's like, it's a lot easier if you're at like 100 than it is 1 million. So it's really understanding where you are and like what's the first things to be able to get in order. Because if I build good habits when I'm small, then I can grow those habits as I get bigger, because a lot of people go in with bad habits with their money and then they wonder why they got to 1 million. Why isn't there more money in my bank account? Like, why don't I have more money at 1 million than I did when I was at 100,000? It's like, well, because we didn't bring good habits with us. We brought the same habits we were doing when we were small. And now we've just, now we've blown up everything. We've blown up our problems. We've blown up the issues. We've blown up the habits. It's like, we got to start somewhere.
Absolutely. And those are fundamental business lessons that you're either going to learn well or you're going to learn hard.
Yes. Yes.
One way or the other, you're learning
Good way
them.
of saying that. Yeah.
Yeah, you're learning them, and it's either going to feel real good or real bad, and that's all there is to it. It's sort of like the first time you ever get sued. The first time I remember my dad said to me, and the first time one of my business got sued, my dad was like, "Well, that'll hurt once.
Mm,
That'll hurt.
yeah.
That'll hurt the first time," and it hurt. Like I was just like, "What is going on?" And he's like, "Yeah, but then you'll realize that this isn't personal. This isn't against you. This is like a business thing that's going on." And in the same way, like I think that these the hard truths you learn as a business owner, the scars that you take with you, hurt at the beginning, and then they just become part of the battle that you sort of know you're engaged with, right?
Yeah, exactly. So that's where it's like, start small, start where you can. Like, I love how you said that. You're going to learn it one way or the other. So I'd rather you learn it before it becomes this issue that could potentially set you back, whether it's years or blow everything up. It's like you use the Sue analogy. It's like it's the same thing with your money. If like you do a couple bad deals or you do deals and they're going fine, but you get in over your skis and now you're doing like 4 flips, but now it turns into 14 and it's like you haven't ever, you haven't managed it right and you're always going over budget and then you're putting your own money in. It's like just a few $1,000s over more properties is a lot more money. So it's like that's where all your money's going. So just being able to capture that and understand it before it becomes this dumpster fire, which we see lots of dumpster fires. So just don't become the dumpster fire.
Well, let's dive in then to
Yeah.
someone wants to start taking these, learn the lessons the good way, not the hard way. Now and then let's bring this back to a bit of technology because
Sure.
I don't think anybody likes unless you are an accountant. Most people don't really like balancing the books every month. Like that is not anybody's, except for accountants, and I'm not even sure accountants like it. Right. But there are tools that I would say are accelerators, helpers,
Yeah.
ways of getting you information you need. So can you dive in a little about like, if I'm scaling up, I'm wanting to start, doing this properly, what are the sort of tools that I can start to use?
Yeah.
What should I focus on first? That kind of thing.
So if you're looking for cash management, that's where you can read a Profit First book and you can actually set up. There's banks out there with technology built around Profit First, where literally you can set up, because Profit First is built on the envelope method. So it's like you have multiple bank accounts, but you're naming every dollar like profit or owner's comp or taxes and making sure that as you do a deal, you're putting money where you want it to go versus it just going in and out. But there's ones like relayfi.com, baselane.com out there. Those are 2 big ones that actually do Profit First setups on the banking side. So they can do like automatic allocations and transfers. So if you've got one account for income, it all comes in and then you want to push it to other accounts. That makes it very simple and really a set it and forget it. It's almost like Profit First, the cheat sheet, the cheating way, where it's like I can have all these accounts and I can have automatic transfers set up. So that's a couple of those. Baselane is built more for like the real estate investing world, where RelayFi is kind of Profit First for anyone. So
I know the Baselane guys.
So
I know the
awesome.
CEO of Baselane.
We talked multiple times. They're
nice guy, right?
Yeah.
Nice guys. And doing something really impressive. And the like in general, the banking, like the new gen of fintech companies.
Yes. Yep.
Wipe the floor with the. I mean, okay. I guess a lot of the new fintechs are still underwritten or there's an underlying bank that deals with them, except some of them, like Revolut is a big one in Europe.
Yeah.
Revolut actually became a bank as well.
Nice.
So
they're not
they started out as one of those fintech, but behind them was whatever brick and mortar bank. But a couple of years ago, they actually became an actual bank in itself, got their banking license, and that's opened them up to being able to do loans and blah, 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 and all this sort of stuff. But the technology you have with these fintechs are I can connect. Revolut, for instance, has an open API. I can connect any of my systems in and trigger things to happen
Yeah.
inside of the bank. And meanwhile, you've got people still writing checks.
Right.
Like,
Yeah.
like
There's no reason to be writing checks today in this day and age. Like on this side, you've got like what, Bill.com or Ramp, or there's like several big companies out there that do this type of stuff. And that's more the expense management side. So if you're, especially if you're working with contractors, and it's like, if you're working with, if you have to do any type of scale and you don't want as much manual entry as possible, that's where I would highly recommend the tech on the tech side, like the Bill.com or Ramp, because Ramp is really good and it's gotten really big out there. We use that personally as our expense management, even inside of Simple CFO, like for us. Then a lot of our clients we put on that as well too. So yeah, there's no excuse to be the cutting the checks. But what I like about these, because a lot of people are like, oh well, what about, shouldn't I need to be able to see it, or I need to be able to pay it, or I need to be able to approve it. It's like, well, these systems have approval processes. It's like it's all in there. Like you could have a bookkeeping team, like literally a virtual assistant team, go through and put all your bills in, but they can't have access to actually pay. So it's like you could put it all in there and then you're approving everything, so you're seeing literally every dollar that's going out the door, but someone else can take care of the grunt work for you, and then you're not cutting a bunch of checks or hiring an in-office staff person to sit there and write a bunch of checks and get carpal tunnel syndrome from all that you've got going on. So this is where that would be another one for the expense management side. I've got other ones too. Obviously, there's the gorilla in the room, QuickBooks Online. It's like you've got those, or Xero, or Wave is another one. If you're just getting started, that's more of a free, kind of like the free version of QuickBooks. It's another financial software that some people use when they're just getting started as a small business. So that will give you an accurate P&L balance sheet and all that. For us, QBO is one of the best ones too out there. They've invested a ton of money into it. We also connect a dashboard to it. Like they have some open API type stuff, so we're able to pull like numbers right from our clients' QuickBooks into a dashboard that we feed. So that's just like one of our tech that we've built for the real estate investing world, to be able to pull out more of like the financial KPIs they should be looking at, and what are the profit, like you said, where's the leaks, where's the real problem, because usually the money is where you start. Like, where did this leak come from? What should I be looking at? What are my returns on investment? All that. So those are a couple of the other ones off the top of my head.
Now, I'm sorry to interrupt this amazing conversation, but I wanted to make sure you knew that Smartphone, the only phone system built for real estate investors, connects to the best-in-class real estate investing CRMs. And because, as it's my show and I am co-founder and chairman of Smartphone, I got some great deals for you. Click the link and take advantage of 5,000 minutes free calling with Smartphone, the only phone system built for real estate investors. Click and call. Close more leads. Back to the show. Yeah, I mean, QuickBooks, look, QuickBooks is QuickBooks. I mean, back in the day, I remember when people only had the option to use, the people were still using QuickBooks, the desktop version.
Desktop, yeah.
And there are still some big customers. Back when I was a consultant 10 years ago, there were still some big customers that were using and they were like, "Hey, can we integrate this?" I was like, "No." Like, if you want to go over, like, unless you want me to I'm gonna have to write a desktop application that's gonna no, go to QuickBooks Online. We can't go to QuickBooks Online, but at this point, QuickBooks Online, I would say for most SMEs or SMBs, and it's called SMBs, isn't it, in the US?
Yes.
It shows my European heritage. But for most small and medium enterprises, I mean, QuickBooks Online, unless you are super specialized doing something real wacky, QuickBooks Online is cheap, easy, and really, really good.
Yeah. And they've gotten just better. They pour more money into that now. I think they've even stopped supporting desktop. Like, they don't come out with new versions. And obviously, there's multiple reasons for that. But, I mean, they are pouring the money back into online. So that now they even have enterprise version. They've had that, I think, for a few years now, where if you've got multiple entities, like if you're one of those real estate investors that likes to just pop up LLCs like
LLCs, like the candy.
Yeah, exactly. Then there's the enterprise where you could have them all in one place. So you're not paying for a bunch of subscriptions for all these tiny little LLCs, that you might have going on. So they've got a lot more options today than they did, especially 10 years ago. 10 years ago, you still had the option between, them desktop or an online. So, but yeah, that's definitely one that we utilize and a lot of the people we work with utilize.
Well, talk to me a bit about your dashboards, because I think I have an opinion on dashboards.
Yeah.
that is mixed, because on the one hand, I love, used correctly, I think they are the easiest way of giving you a snapshot into and an early warning system.
Yeah.
Used incorrectly, they can lead to paralysis.
Right.
And
Yeah.
and data in general, I think, people, oh, I want more data. I want more. Why? Like, like there's only so many things you can care about, and there's so many things that matter. So when you think about a real estate investor in that kind of start to scale,
Yeah.
and you start to introduce them to dashboards in your dashboard system, what are the things that you're getting them focused on first?
First is never track the number unless you're going to make a decision from it. So usually our dashboards are really set up of like, okay, what are really you going to make a decision on? It's like, yes, we need the profit and loss, the balance sheet. I need to teach you that as a business owner if you don't already know how to read these statements, because that's a fundamental. Like, as an owner, you should know, at least have a cursory overview of like, I know where these things are, and I know, especially if you're a real estate investor, because the balance sheet is super important. It's not that it's not in other businesses, but like for real estate investing, if you're a flipper especially, like lots of your assets sit on the balance sheet. So it's like, we got to teach you where that money is and where it is. But for our dashboard, that's where we set up like specific tabs for real estate investors that are matter to them. So if they're fixing and flipping, it's like, here's a specific tab of what projects do we have going on? How much of a loan do we have on each project? How much do we have left on this project? Do we have enough money from lenders' funds to be able to cover all of our projects? And if not, how much do we either have to go raise or put of our money into it? Because that's a decision they'll have to make. And that's like one of the big ones that helps flippers especially not go bankrupt or belly up. It's like, I don't want them running out of cash. I want them knowing way in advance. We also have like a stoplight report on there where we pull numbers for them to be able to say, here's what I'm seeing that's red, yellow, green, like where are we off track, where are we on track? A lot of it has to do with cash. We do profit first on there, where it's like, what are your percentages? Do you know where all your money is? Here's where all your money, and all your cash is. Are you starting to pay yourself? It's really the things that they need to know when they're first starting a business to be able to make sure. What are they making? Where's it all coming from? What are they spending and what are they keeping? Like, we try and keep it really simple for them around that, and then just telling them, okay, here's where your revenue is. Here's where your gross profit is. Here's where your net profit is. And like, how can we make that net profit better and put more money in your pocket? And our dashboard is set up at a high level to go over those things. And then there's specialized, like, individual things, like if they have a debt that they don't like and it's weighing them down, like there's a debt pay down plan on there, making sure we can get the debt off their plate, stuff like that. It just depends on also who's coming in the door and what's relevant to them. Like I said, it doesn't go on the dashboard unless we can make a decision from that number.
And I think that is such a important way of looking at, honestly, about all reporting, because I have seen so many people just like back in the day before smartphone took off, and I was building custom systems. I was building custom systems inside a platform called Podio, and you'd get some people. You sort of had two classes of real estate investors that I kind of started to work with. One were the cowboys of like, I don't give a fuck, let's just go, right? Like like let's just go and let's just full steam ahead and and the other, there was a class that wasn't as common, but I've seen it across every business model of the guys who are just like, I want more data. Like, and they got so much data that I was like, what the hell are you doing? Like,
what are you doing with all that?
Are you just basically spending all day looking at data? Like,
right.
Should you be selling more, or like, and so there is I think that the way you come at it with, we're not going to show you anything on this dashboard unless this is used to make a decision, is just a good way of looking at reporting in general on your business. If it doesn't impact your decision making, it probably doesn't matter.
Yeah. Yeah, it's like, why track this number? It's like, well, I heard it at an event or I heard someone else's track. It's like, well, is it relevant to you and have you made a decision around it? No. Well, then why are you tracking it? It's like, it's just another thing that's cluttering it up and probably causing what you said, the analysis paralysis. It's just another thing. It's a decision fatigue. And like, maybe you're not making a decision, but maybe you should be, or maybe you should be making it on that one. But another thing over here, it keeps bogging you down. It's like, if you just are looking at a dashboard of numbers and you're not a numbers person, it's like, what the heck am I doing? Like, I don't want to look at any of it. Like, okay, just let's get this meeting over with type thing.
Absolutely. Well, and that is, that's, anybody listening to this, you're going to identify yourself in one of those camps. Like, you're either going to go, yeah, I really need to stop looking at the data and go sell some things, or you're going to go, yeah, I don't even know any of this data. Maybe I should at least check to how much money I have in the how much money I have in the account. But you're gonna find your way in that.
Yeah.
And I think that approach of that profit first approach is if you start to look at your business very early on with that, I'd say the chances of you going too far off course really start to minimize because you're not going to be able to.
Right, exactly. And that's why I like profit first, because if you're in that first camp and you're like, I don't care what they're talking about, like, let's just go and let's sell. It's like, that's good, but you're probably spending too much. Like, you're probably also the spender that just spends to get revenue in the door, and you don't care about the bottom line. Even though you might say you do, it's like, yeah, but the bottom line doesn't reflect that. Like, we're either upside down or it's like 5% or less. It's like, well, then no, then you don't care about the bottom line, and we got to help you. And that's where Profit First can help them spend the money they need to make the money they need to, and like actually know the percentages. But on the flip side, if they're like, I love the data and I just want data, well, then usually that's like they have a making issue. Like, they don't make enough because they're spending too much time in the analysis paralysis and they're just over analyzing everything. That's why I also like Profit First too, because it's like, here's the money, here's the systems, like, here's the percentages, here's what you need to spend to get a deal. And if you spend your money, like, or all your time on doing these other things, but you're not spending the money to have the phone ring and you're picking it up, or like someone on the team is doing that stuff, then it's like, then you're not going to make the money you need to. So it kind of like puts people on even ground there. But that's where it's like, we got to attack that root issue. That's why I like what you said at the beginning. It's like, I got to know the real problem. What's the real problem here that we're trying to solve? It's like, why do I like looking at the numbers? Is it because I'm avoiding and I don't like being on the phone, or I don't like some of those other things, and it's like I'm more comfortable, right, with the numbers? And on the flip side, it's like, well, am I more comfortable with selling? And I am allergic to spreadsheets, and like, I am never going to look at it. It's like, I don't want to. It's like, I get that. Totally get that. At the same time, I also don't want to have a business that's kicking your butt. And like you're saying, I'm putting all this time and effort in, but I'm not seeing anything at the end of the day. Well, we've got to have some steps, not even steps, but systems. Like, this is the real estate tech. Like, we got to have systems in place to make sure that we ensure our profitability from each deal, and then from our business as a whole too.
Well, and what the sort of a gentle irony of all of this is that there's nobody who like all real estate investors in general, they will think deeply about their CRMs and about their lead pipelines and how to fill top of funnel, middle of funnel, how to do that. They'll think deeply about that. And from my perspective, on the phone side of things, they'll think about their talk times, and they'll think about their outbound volumes and their average call durations and all this sort of stuff. They'll think a lot about that. And somehow that detail is interesting to them. The finance one, not so much.
Right. And I'm like, this is literally, you're avoiding the thing that will bring you financial freedom. It's because I saw it when we were doing 25 deals a month. That was my epiphany of when, playing the Robert Kiyosaki cash flow game. It's like, it does not matter how many deals you do. It matters what you do when the money's in the door. So it's like, I need to know what to do with the money, or otherwise I'm not going to get to the fun track. I'm not going to get to financial freedom. I'm not going to ever achieve that. And we were living proof, because we did lots of deals. We did 300 deals a year, and we were no closer than the person doing one deal that was in the same boat. Like, this is where we had to make sure that we had good systems to ensure that profitability, because otherwise we're just building and scaling. But for what reason? Like, and we're just solving the wrong.
The vanity.
Right.
Essentially, it's the vanity. Yeah, but I've done 300 deals a year.
Yeah. We did
Okay.
100 deals in 100 days once. It's like, I remember being so proud of that. And it's like, yeah, but at the end of the day, we had no money. So it's like, who cares? Like this is not something we should be bragging about. It's like, ay, ay, ay.
And the thing is, if you're listening to this and you identify yourself in either of those camps, the good news is you can be taught, you can teach yourself these things. Like in the same way that sales, people always say you in sales, and I've been in sales my whole life, essentially, tacitly, and probably so have you.
Yeah,
Anybody who has a business kind of is always going to be in sales.
exactly.
But the good news is that sales is not black magic. It's not a trick either.
Right.
It's not a trick you're pulling.
Nope.
The basics and fundamentals of sales can be taught, but so too can the basics and fundamentals of financial literacy. And neither is unachievable, and neither is complex, and neither of them is only achievable by a certain type of person.
Right.
And
Exactly.
I think that's an important part of this equation is like we often pigeonhole ourselves into, oh, well, yeah, because I'm a sales guy.
Yeah.
I'm more of a
Yeah.
sales guy than sales. That doesn't mean I couldn't do the work, the minimal work to get basic financial literacy of my businesses.
That's why I was driven to profit first, because I'm like, this speaks to me as an entrepreneur, and not to like, I have to go learn how to be a bookkeeper, or I have to learn how to be this tax expert, or I have to learn how to do QuickBooks, or whatever it might be. It's like, I'm going to manage cash. I need a good system to manage cash because I need to know what's coming in, what's going out, and what I can ultimately put in my pocket. If I'm building a real business pays you. A real business pays the owner. You don't have to take the money out and feel guilty. It's like, we have to have those real steps. And that's where that financial literacy can come into play. Even if you haven't had any training in the personal finance realm or anything, it's like, well, let's make sure on the business side we take care of that. And it's crazy. If you start to take care of it in one area, it's like it bleeds over to the other area. And it's like, maybe the order I'm getting in my business now I can bring to my personal life as well too, or vice versa. If you've got good habits in your personal life, say what makes those good habits. Like, how do I apply this to the business? And honestly, like, profit first is just the envelope method. So it's like just being intentional with every dollar. So it's like, it's not complicated or rocket science. It is literally not even accounting. It is literally just a system to make sure you know where every dollar is going. So that's where to start.
So, how do obviously you've got the book, which I will
Yeah.
post a link to the Amazon in the show notes, but you also have Simple CFO Solutions, which is your
Yeah.
company.
Yeah.
So tell me a bit, in closing, tell me a bit about what you offer, how you help real estate investors, and how, if someone is, what's the type of person that can come to you
Yeah.
guys and benefit.
If you're under 250,000 in revenue, we have a 60-day program to get all this set up for you, like QuickBooks, Profit First, the system, and a dashboard, like a simple dashboard to make the decision from the numbers. So like we have a very simple 60-day program that you work with one of our high-level CFOs. You're not working with a bookkeeper. You're not working with like just a CPA that's going to brush you off. You're working with a part-time chief financial officer for 60 days and getting all that implemented. If you're above 250,000 to 300,000 in revenue and you're doing multiple deals or you've got stuff going on, we have more of a recurring program where you meet with the CFO on a regular basis. And we do three things with every client. We make sure you have the right books, numbers, system, people. We make sure you have profit first and you know where your cash is going, so you put more in your pocket. And we set up that dashboard so we can scale profitably, so we know the numbers to be able to make the decisions together as that team. And we're putting the decisions in front of you, where a lot of people just don't know those next steps. So that's what we're doing. And that's at simplecfo.com.
Yeah, and I'll put those, and I definitely recommend, look, if you are scaling, it is never too early to put the right processes and systems in place.
Right.
It is easier the less volume you do to implement things,
Yes.
right?
Yes.
Like it is
100%.
just easier. And I will give a bit of a confession here. So Smartphone, my company,
Yeah.
we, last year we did just shy of 10 million. So a relatively decent sized company.
Yeah.
I would say we didn't have a full understanding of our finances for the first 3 years of our business.
Yeah.
And it was, and equally, and I take responsibility for that. I was CEO, but our CFO, who is a co-founder, and he really upped his game. Alex, I always had a mind for that, but he took it upon himself with actually someone we brought into the board, who helped him, but he took it upon himself to upskill himself and really get, like, if this business is going this way, I need to be able to perform. We all have to perform at the level of the business. And while we didn't start with the best understanding, we have the best understanding now, and it's all credit to Alex. But I will tell you, as a business, as a CEO at the time, the clarity I was able to get once we as a team, particularly my co-founders of the board, Vlad, Alex, and myself, and once we had the clarity that Alex brought to it, understanding with the T12 reports that we get, I get 4 reports, understanding the cash flow, report every month. Once we had that clarity and that ability to forecast and ability to really understand what's going on, it made the stress of running a business go almost away.
Yeah.
And it made our ability to make decisions based on, good decisions, it took through the roof. So these are the impacts that can happen if you get this kind of knowledge in place. And don't think because you're doing 20 deals a month that it's too late for you, because we were probably doing a few $1 million a year when we finally decided to get serious about this.
Yeah.
And it can be done at that late stage, and you'll reap 10x the benefit.
Yeah. No, well, I agree. So it's like, just the sooner you can, the better, to be able to reap those benefits and have the habits in place, so that way as you grow and scale, you've got those in, and you could be able to pay yourself and know where the money's going and not have as much stress. There will still be stress. It's just, as you grow and scale, it doesn't have to be the same type of stress. It's just different stress. It's like, at least you're not going out of business. It's like, here's the other things that we have to work on.
Absolutely. Well, David, it's a pleasure, an absolute pleasure to see you again and have a chat. I will make sure that Simple CFO's the links to the book, everything, and your podcast are in the show notes. And I do encourage anybody who's listening to this to drop David a line. You can find him. I mean, I assume we can find you at the website, but also socials.
Social media, the David Richter. So if you just find me on all the things.
Yeah, I do encourage everyone to drop David a line. If you are starting out, scaling up, if you're not feeling like you have as much a handle on the business side of things and the finances as you should, it is absolutely worth your while. Drop David a line and find out how you can get that clarity and peace of mind. And David, thank you so much for coming on the podcast.
Thanks for having me, Jordan.
Thanks for listening to another amazing episode of That Real Estate Tech Guy. Head over to thatrealestatetechguy.com to check out all episodes and get special discounts on tons of awesome real estate technology platforms.